Hi, Hugh Lopdell here from Oak Park Chartered Accountants. This is my third COVID update video for pharmacies. Many pharmacies from around the country now tune in to these, so I hope you find this one helpful. Today I'm going to give my perspective on what's happening with New Zealand pharmacies, clear up some confusion in regard to the Ministry of Health financial support funding allocation and also the wage subsidy, update you on some new government assistance and tax measures, and make a few general suggestions. Before I do, I did promise a video soon where I talk about some opportunities I see for pharmacies in the current situation, particularly in regards to innovation. So one of the upsides, maybe the only upside, to being left high and dry on limited guidance and support in this crisis is that pharmacy owners have had to improvise, to adapt and to innovate. There are opportunities in particular in regard to deliveries, increased use of technology, texting and online. So to give me ammo for my video on this subject, I invite you, if you're a pharmacy, you're really proud of your innovation in regards to any of those things, to email me and tell me, and I'll share it in my next video. If you'd rather I don't disclose who you are or where you're from, that's fine, just say. The thing is, there's zero chance, I believe, that Chemist Warehouse will pick up on these. Even if they want to, they're just too big. But there is every chance that your fellow community pharmacies can. You can help each other beat the big guy, perhaps. The invitation's there. Tell me about your innovation. My email will follow at the end of this video. All right, from my talks with pharmacies, activity lines up pretty closely with what I said in my first COVID video to pharmacies in early April. In the suburbs and rural, they're busy. Retail is down 20 to 40%, but script numbers are either at normal levels or higher than normal. There's high demand and early start for the flu vaccinations has kept people busy, and city doctors have been faxing scripts out to the suburbs. On the converse side, it is still the malls, urgent, city pharmacies, and some already stressed Auckland pharmacies who have dropped their co-payment, who are just getting through this. They hopefully will return to normal, their version of normal, as the cities repopulate and as doctors get back to normal again. And I understand that to be when hospitals are in full swing doing elective surgeries. People are having accidents again, sporting, car and other. People who have been putting off seeing their doctor because they're locked down, go and see their doctor. And as doctors are able to have physical consultations with patients instead of virtual consultations and faxing all their scripts back to the suburbs. That'll help city pharmacies when that doesn't happen anymore. There are some indirect COVID-affected behavioural changes that are or may affect demand at pharmacies. In lockdown, people are not spreading and catching colds and flus, are they? And with continued social distancing and better general hygiene, this may cause a drop in this year's cold and flu sales. There is likely to be a permanent increased demand for flu jabs. As the cities repopulate, some people may stay working from home either for a while or permanently, and that'll affect city pharmacies and suburban pharmacies on the upside. Some suburban pharmacies, despite good script volumes, are feeling the squeeze cash flow wise. As their retail is down, so their cash take is down, their drug wholesaler bill is up, and their case mix service fee catch up for March's high script volumes is not arrived yet. Now my advice is to watch your stock ordering, which may have defaulted to the higher March levels. And if you don't adjust for the 1 month dispensing, you may end up ordering too much stock, having to pay for that and getting squeezed cash flow wise. Pharmacies have been doing different things in terms of customer access under COVID. All of them seem sensible to me. Some are following Green Cross guidelines and not allowing people in the store, so you serve them at the door. Some allow in one at a time, some allow more than one at a time depending on the space, requiring the 2 metre distance. Some ask them to wear gloves or to not touch stock, but to have a retail member select the stock for them. Some don't do that and just get customers to sanitize their hands at the door. One I spoke to has a one-way traffic system. They've got a small pharmacy, but they've got a one-way system that allows people to come in, browse, buy things without violating good practice. Obviously, if you can, the more people you allow to your store safely, responsibly, the more retail stock you'll sell, and that'll help. So that's my perspective I have from talking with pharmacies from around the country. Now, there are two questions I've been asked a number of times in the last week or so, which I'd like to cover. One relates to how to recognise the support funding paid on 1 April, and the other relates to claiming the wage subsidy. So, the Ministry of Health Financial Support Funding Allocation, the $15 million, your bit of that was paid on 1 April. The smallest amount I've heard was 8,000, the largest was over 30. Now, I said in my last video the payments are GST inclusive and that they are probably subject to income tax. I wasn't 100% sure. I have had confirmation now that from the Ministry of Health through the Guild that they are subject to income tax. So I suggest in your Xero or your other accounting program you code it to other income so as to not distort your gross profit margin. You'll pay GST on it in your April-May GST return. And then there's a question of which financial year to recognise this payment as taxable income. I have read the Guild memorandum in mid-April about this and have some professional difficulty with some of what it said, particularly in regard to recipient pharmacies electing whether this income belongs to the March 2020 year or the March 2021 year. Tax law determines the period when income is derived and therefore taxable. So contrary to what the Guild memo says, you can't choose which period you like to put it into. It should generally be allocated for tax purposes into the period to which it relates. So based on the information from the Ministry of Health that the payment is in respect of the period 1 March to 30 June, 1/4 of the payment is subject to income tax in the 2020 income year and 3/4 in the 2021 income year. That split's also backed up by the fact that for pharmacies that changed hands on 1 April, 25% was paid to the vendor, 75% to the purchaser of the pharmacy. So the Guild indicated you could choose to tax this payment in the 2020 year. Now, despite the fact that I disagree with this advice, if you were to do that, you would bring forward the taxability of this income by 12 months. And I don't know why you do that. Every accountant in the world would say defer tax if you can. Don't advance it and pay it early. If your reason for recognising that payment in the 2020 year is so you can claim the wages subsidy, I'd be extra careful. Bear in mind, government auditors will be looking at some of the wages subsidy claims and may not look so favourably on pharmacies stretching the accounting interpretation on when to recognise this financial support funding, so that you may claim some more government support funding by way of a wages subsidy. My advice to my pharmacy clients is to proceed on this basis, that 75% of it counts as revenue in April and almost certainly will disqualify them from the wages subsidy based on April's figures. A couple more issues with the wages subsidy that are peculiar to pharmacists. The explanatory wording changed at some stage in early April, and to qualify it is clear. It must be a month-on-month drop of revenue of 30% at least. It can't be on a forecasted basis over the coming months. So April this year compared to April last year is what you're looking at so far. Now April is now history, so your tonic or lots reports will show you if turnover dropped by 30% or more on last year. If you want a list of those reports, let me know. To qualify for the wage subsidy, there must be a decline in revenue, and that decline must be due to COVID, not something else. Now, April's revenue decline was due in no small part for most pharmacies to the heavy 3-month dispensing in mid to late March, which produced the inevitable lull in the first half of April. I wouldn't call that resulting lull a decline in revenue due to COVID. Really, it was just a moving of script volumes between months, and that is definitely not what the government meant by decline, in my view. So please bear that in mind before you use April's figures as a basis of a claim for the wage subsidy. A second thought on wage subsidy: to claim the wage subsidy, there needs to be a decline in revenue of at least 30% month on month. The definition of revenue in the Work and Income website is the total amount of money a business has earned from its normal business activities. Now, you could argue that the financial support funding does not qualify as being earned from normal business activities. If the receipt of that money on the 1st of April was the only thing keeping you from claiming the wage subsidy, then you could have some basis for claiming that subsidy. Thirdly, most mall, urgent and city pharmacies qualified for the wage subsidy and correctly claimed it. But I estimate that as much as a half to 2/3 of remaining pharmacies that claimed the wage subsidy did so in error. Now, a number of my pharmacy clients did claim it in error. It wasn't ill-intentioned, they just got worried, they weren't sure, and they erred on the side of claiming it. If I'm right, that is a sizable number of pharmacies across the country that may have to pay this back. A few more bullet points on the same subject. Remember, if you claimed the wage subsidy, you should have got written agreement with your staff to reduce hours to 80%. Once you're back trading again, you should be restoring fully. You should be restoring people's pay as your trading allows. There are no rules as to when you have to lift people's pay back to 100%. It's up to you to decide and to agree with your staff. You should get fresh written agreement again on the change to their hours. An email exchange is fine for that purpose. Remember, if you end up having to lay off staff inside the 12-week period, you need to repay that portion of the wage subsidy if you claimed it. If a staff member resigned and you had claimed the wage subsidy for them, you don't have to repay that as long as you use the wage subsidy money to pay other staff's wages. Note that the wage subsidy is still available, unaltered. So if somehow you qualify but have not claimed it, you can still. Okay, enough on the financial support package and the wage subsidy. The government has introduced a number of new support measures, including some tax changes. The first is the Small Business Cash Flow Loan Scheme. So the government will provide loans to businesses on quite generous terms commencing soon. Any pharmacy that qualified for the wage subsidy would qualify for this loan. So qualifying businesses can borrow $10,000 per business plus $1,800 per full-time equivalent employee. The loans are interest-free if they're paid back within a year. Otherwise, interest is at 3%, and it's for a maximum term of 5 years. No repayments are required for the first 2 years. As far as I can see, these loans are not secured. It's administered by IRD. You apply through your My IR login. On application, you will enter into a binding loan agreement with the government. So IRD expect that applications will be available from the 12th of May. Unlike the wage subsidy, it must be paid back one day. So a budget is a good idea. All right, the tax loss carryback scheme. Now this measure allows businesses to offset any 2021 loss against their 2020 profit and get a refund of 2020 tax. I cover this in my other video to small businesses posted on the 5th of May. I don't know if even the most struggling pharmacy will make a loss in 2021. But if you want to know more, have a look at that video and it explains it in more detail. Now, rent and leases. There have been some law changes in regard to commercial leases. They are unlikely to be of help to you either as a landlord or a tenant. They're for quite extreme situations, but I also cover those in my other video along with some suggestions in regards to persuading your landlord to give you rent assistance if you've tried and failed. All right, low value assets. For a year from the 17th of March 2020, so that's effectively the 2021 tax year, any assets purchased up to $5,000 can be expensed, gaining an immediate tax deduction instead of being depreciated. Previously, that threshold was $500. This measure will revert back to a $1,000 threshold in a year. So it is a one-off tax advantage for the next 10 and a half months. Now, if you purchased any assets up to $5,000 between the 17th of March 2020 and the 31st of March 2020, you will get an enhanced tax deduction in the last financial year. Tax payments. Now, I covered that in my last video. It is tax time, isn't it? If you can't pay your taxes, that's GST and provisional tax on the 7th of May, because of COVID, IRD will write off your interest and penalties on application. Okay, that's quite a bit, and that's all for this time. Remember, email me your innovations and ideas with technology and deliveries. Follow Oak Park on Facebook if you want to keep getting these videos, or email me and I'll put you on the list. If you have a question on any of what I've mentioned, I'm happy to answer your emails. That's all from me, Hugh Lopdell from Oak Park Chartered Accountants, signing off.